All right. Lecture for today basically is a sort of an introduction lecture. Our prior introduction with regards to how we'll go about with the course, we've already done that. Um, but this is obviously a new finance act, a new law, right? The first three chapters, in fact, four chapters I've already uploaded on the Google Classroom. That's just one PDF which has four chapters. Okay. So you guys can download that, and it's in the downloadable version. So obviously you can download and you can save it and create your own folders, right? Obviously today's class is basically on introduction to taxation. All right, what exactly taxation is about. So the agenda, basically what we'll discuss today is what is tax, direct and indirect tax, tax evasion versus tax avoidance, and some basic things specific to UK taxation. Okay, how the UK taxation system works and everything. Kosei, you cannot hear me. Guys, can you hear me? Can everyone hear me?
Yes.
All right, Kosei, you need to please check your mic. If your mic is not working, obviously you're not going to hear me. There's an option in Zoom. You have to connect your audio in order to hear me. All right. So, okay, now moving on. So basically, these four things we have to discuss today. First of all, and I want you guys to pay very close attention, because this is where these are the building blocks basically for you guys, right? First of all, what is tax? Does anyone know what tax is? Revenue collected by the government. Who does the government collect this revenue from, right? So this is a collection from the public. Public, mainly you can call them residents of a country. So that's the main criteria. See, if I'm a tourist, why would you collect tax from me? Simple. I don't live over here. Why would you? I don't earn over here. I'm just here for, let's say, a few days. Why would you collect tax from me? You mainly collect tax from the residents of your country who are benefiting from your infrastructure, from your healthcare, from your education, from the general, technological changes, from the economic environment that you've provided the businesses. So your residents are basically benefiting from it. Why should I pay the tax if I'm a tourist, right? So it's mainly a tax on it's mainly a portion of residents' income that comes out from the residents' pockets and goes into the pockets of the government. Now, why is tax important? This is a very, you know, a very different question. People don't understand this. Why is tax important? See, there are certain regions in the world which are oil producing regions, right? For example, Qatar is one of them, right? But mainly Qatar does not earn from that source. The main earning for Qatar is not that. For example, Saudi, the main source of earning for Saudi is what? Oil, right? The biggest oil producer in the world is the US. Second is Saudi, third is Russia, right? So these countries, but see, US and Russia, they don't mainly depend on oil. Like the government over there does not mainly depend on oil. They, for example, in the US, they depend on tax revenue. Okay, they tax their residents. Okay, what enables them when they tax their residents is, number one, it allows the government to spend on defense, right? Very important in today's world, especially very important. You guys see what's happening in Ukraine, right? You guys see what's happening in Yemen. You guys see what's happening in For example, Syria and all the regions, right, which are basically war-torn regions now. Ukraine is not a war-torn region, but still is, it's being affected, severely being affected, right? So defense is the first thing that the governments spend on. Next, they spend on healthcare. Third, they spend on education. They spend on infrastructure. They spend on telecommunication. Telecommunication, right? And other sectors as well. But these are the major sectors that a government spends on. The problem is that if you don't tax your residents, for example, see, you cannot monitor how your residents earn. For example, does the government know how much I earn? Probably yes. But is there a possibility anywhere in the world, any resident of any country, is it a possibility that, let's say, the government of UK doesn't know exactly how much David Beckham is earning, for example? Okay, that's a possibility, because there might be certain types of earnings which, let's say, that guy is not disclosing, or are probably, it's being disclosed but it's not being taxed. That's also one thing. This is part of the law. The law allows certain incomes to be exempt. The government won't collect tax on it. I'll give you examples later on about these type of incomes. So the point is all your income taxable? No, not necessarily. There could be two types. One, income that you haven't disclosed to the government. Obviously, the government will never know about it. For example, your gains on Bitcoin or any kind of cash receipt. Now, if you're not disclosing the cash receipt to the government yourself, how would the government trace it? It's not coming in the bank account. You can just go home, put it under your bed, put it under your pillow, and go to sleep. Stack up cash over there. The drug lords that you probably heard about in the Mexican region or the Colombian region, right? These drug lords, how do they fund? Plus, they don't report their earnings. They don't pay tax. Why? Because the amount of cash they're funneling through, it's all physically, it's traceable. You can physically see it, but where did it come from? Where did it go? That's not traceable. How can you trace cash? No one can trace cash. Okay. Once it comes out of the government's printing press, it's non-traceable. You can't trace it anymore. You would never know who has that printed unit of cash. No one knows that, right? So the point is that the government tries to ensure, obviously, maximum input of the residents in order to collect tax. Yes, residents, like I told you some examples over here, residents may avoid tax, may evade tax, which we'll talk about, which is the next thing, right? The point is, if the government fails to collect tax or is not able to meet its expenditures, see, every government has a budget. Okay. Every government has a budget and they spend according to their budget. Sometimes they go over the budget, right? The problem is that if you have collected, let's say, for example, your personal income, I'm going to talk about. Let's say your personal income is 10,000 pounds. Okay. We're going to study in pounds because we're studying the UK taxation. Okay. Let's say your personal income is 10,000 pounds. Okay. If you want to convert in Omani Real, you can, your choice. Okay. But let's say this is your income and the budgeted expenses you have are, let's say, 15,000. Now, these are unavoidable expenses. If you don't incur these expenses, you won't be able to sustain your living standard. You won't be able to sustain your living standard if you don't incur these expenses. Okay. So you see that mathematically speaking, there is a deficit of 5,000 pounds. Yes, there's a deficit of 5,000 pounds over here. Can you tell me how would you fulfill this deficit? There's a deficit, right? So how do you suggest you can fulfill this deficit, guys? Come on. You have an income of 10,000 pounds. You're spending 15,000 pounds. How would you fulfill this budget deficit? How would you fund this deficit? Come on. No answers. Mariam, what do you think? How would you fulfill this deficit?
Maybe borrowing.
Borrowing. Okay. Now, see, one thing is you can increase your income, but for now, we'll assume that that's limited. You can only earn 10,000 pounds, not more than that. So what you'll do is, in short term, you'll borrow. Now, there are two types of borrowings. One, you can borrow from your relative who is very close to you and will give you easy terms on borrowing, easy terms on the loan. That's one thing. Okay. Second is you go abroad, or let's say you borrow from some stranger. Okay. Forget about going abroad. You borrow from some stranger. And ultimately, this stranger is going to give you arm's length terms. Arm's length means the local market terms, arm's length terms. So for example, this guy, the stranger, will give you a 10% interest loan, and your relative might give you 6%, some easy terms, right? So obviously you'll go towards your relative. Relative means people. And if I talk at the government level, your allies, right? You'd go towards your allies, right? For example, if America is your ally, is the ally of a government, they're going to go to America. If India is the ally of your government, they're going to go to, obviously India itself needs borrowing, right? But let's say if any other country, China, for example, or Russia, for example, whatever the country is, if they are your ally, they're going to go to their country, right? But if your economic situation is so bad, the allies are even not willing to help you, then you might issue bonds in the market. That means now you're willing to borrow at arm's length. So imagine, just to fulfill this deficit, I've got two options, basic options. Number one, increase my income. Number two, reduce my expenses. If I increase my income, that's not a short-term solution. At the government level, I'm talking about, I'm coming back to the government now. At the government level, it's not an easy task to increase your income. That's tax revenue, right? Decrease your expenses. Okay, fine. Decrease your expenses, then reduce your standard of living. Reduce your standard of economic reality, basically. Okay, you wouldn't want to do that because your standing in the global world, in the global village, would obviously be, it would get impacted because of that. Okay, so you will incur this deficit, that's for sure. How would you fund it? Through a borrowing, like Mariam said. Okay, so borrowing, again, like I said, you borrow from your allies or you borrow from the regular market. Okay, now the point is, that is why the governments work really hard to collect tax from the people, from the residents. Now, I'm teaching a bit of economics over here as well, because a very, very, very important factor of economics is tax. Okay, when you start applying tax on your people, listen to me very carefully, please. Okay, there are two types of taxes that you could apply. One is direct tax and the other one is indirect tax. Okay, like I said, tax is really important. Why? Because otherwise you will end up borrowing, and at the end of the day, your deficits will further increase. This time, not because of your budgeted expenses only, because they exist. Your budgeted expenses are not going anywhere. They will exist, they do exist, they will exist in the future as well. But now your deficit will further increase because of the interest payments you have to make. Make sense? So your deficit will further increase because of this. The point is, see, there are two things. You're taking a loan for what? To increase your revenue. For example, I'll tell you, I'll give you whatever examples you need over here to understand what we're talking about. If the government takes a loan to invest in a national level solar project, or forget about solar, let's call this renewable energy, national level renewable energy project, and takes a loan plus invites private bids as well, national level renewable energy, or let's say invites private bids, takes a loan to subsidize those bids. Make sense? That's a national level renewable energy project. They want to start at a mass scale. Now the loan that they've taken, you know what will happen? The interest of this loan and the loan repayment will be through the tax collected from these people who will end up planting their project under this scheme. Obviously, there was an initial subsidy. I gave you the subsidy. For example, let's say the project was for 500 million pounds. I'm going to give you 50% subsidy. So 50% of that is 250 million pounds. You bring in your own 250 million. I'm going to give you, as the government, I'm going to give you 250 million pounds. Start a renewable energy project and start giving the electricity to the grid, to the national grid. Start doing that. But since you're a private company, I helped you initially, I agree. Now, whatever income you earn, I'm going to tax that. So this is how you use the loan for positive economic footprint, I would say. This would translate, the usage of this loan would translate into a positive economic footprint. As a result, what will happen is your tax collection will also increase. But on the other hand, if, for example, I'm taking a loan to, let's say, fund the deficit that I've already incurred somewhere, now that thing is gone. It won't produce any more income. It might, if the deficit is because of productive reasons, it might. But in most circumstances, history tells us that it doesn't. Okay? So that's why tax is very important. Now, like I said, coming back to this, direct and indirect tax. Direct tax, I'm going to give you time to copy down. Okay, you don't need to copy it right away. I'll give you time to copy it down. Direct and indirect tax. Direct tax is where the government collects tax on the income of an individual or a company. Whereas indirect tax is tax on the consumption of an individual or company. Let's take the example of an individual because all of us can relate. What does it mean by direct tax? Direct tax means, let's take the same example. My income is 10,000 pounds. The government comes up to me and says that they want to collect tax on this income, and the tax rate would be 20%. Fine. Apply 20% on this. So the government takes away 2,000 pounds. Now I'm left with 8,000 pounds as disposable income. Question. And guys, please, I want you to answer, okay? You can't just sit through the entire online class quietly. without engaging yourself. You can't do that. That's like not possible. Okay, even if I'm doing that in some of my classes, I'd sleep. Okay, so I want you to engage yourself. Now tell me something. This 20% that we're talking about, that is the percentage of direct tax. Percentage of direct tax. Okay, this 20% that I'm talking about, will it be same for each and every individual? Will it be the same for each and every individual? Yes or no? Guys, it doesn't take an entire day to just unmute yourself and tell me. Joka, what do you think? Will it take an entire, will it be the same for every individual? Kosai, what do you think? You can unmute yourself, Kosai.
Yeah, I think should be the same.
It should be the same, you're saying. Okay. Let's prove that it's not the same. Okay. See, your income is 10,000 pounds. My income is 8,000 pounds. 20% of that would be how much? Come on, guys. 20% of that would be how much? Simple math. Come on. I want you to engage. I know it's the very first class. It's a bit awkward to unmute yourself and say something, but you need to make a habit out of it. 69 pounds. Okay. As a result, how much are you left with? How much am I left with? 6,400 pounds. This is my disposable income. Did I pay the same amount of tax that you did? No. Why? Because my income is lower. Let's say there is Nasser. Nasser has got an income of 50,000 pounds. 20% of that would be 10,000 pounds. So Nasser is left with an income of 40,000 pounds. The 20% stays as it is, but the tax amount will change. Why? Because it's proportionate to your income. The more you earn in absolute terms, the more tax you pay in absolute terms, but the percentage stays the same. This is not how UK tax works. I'm just giving you a general example, okay? The point is that direct tax is just. It's acceptable in, according to the global norm, according to the basic ethics, it's acceptable. You know what indirect tax is? For example, you've probably heard about this term, value added tax, VAT. Okay. How does this apply? This applies on consumption. For example, let's say you've got 10,000 pounds. Your income, so let's take Kosai and let's take me and let's take Nasser. Okay. 3 examples. Let's say the 3 of us, okay, go to a shop to buy lunch. Go to a restaurant to buy lunch. Okay, done. The lunch cost is, let's say, let's take it as 200 pounds. That's the cost of the lunch. The government says whatever you consume, what did I tell you? Indirect tax is tax on consumption. The government says whatever, this time it's not on your income. The government says whatever you consume, you'll have to pay 20% tax on that. So, okay, fine. Let's call this an indirect tax of 20%. 20% of 200 is 40, right? Therefore, the amount of tax that Kosai, myself, and Nasir will pay is 40, because we're taking the same amount of lunch, right? We're taking the lunch costing the same amount, 200 pounds. We went to the same restaurant, 200 pounds for Kosai, for me, and for Nasir, right? Now, let's do some math. Listen to me very carefully. Let's do some math. 40 pounds divided by 10,000 multiplied by 100. That's 0.4% of Kosai's income. Kosai paid a tax on this lunch of 0.4% of his income. I paid this at 0.5%. And Nasir doesn't even care because it's like 50,000 pounds he's earning, man. Okay. That's 0.08%. So the percentage of tax, indirect tax against income is this. On this lunch, 0.4% of Kosai's income was paid as tax. On the same lunch that I had to pay 0.5%. And on the same lunch Nasir had, he just had to pay a 0.08%. That's nothing. Tell me something. Who is paying the highest amount of tax over here as a percentage of income? Guys, come on. If you don't reply to me, I'm going to stop the class and I'm going to send you the recordings. That's it. Okay, because the class is not being, I need to make sure the class is engaged. All right. So you need to engage with me. You need to unmute yourself and tell me who's paying the highest amount of highest percentage of tax against income. Come on, guys. Nasir, what do you think?
For this one, 5%.
Sorry?
5% is the bigger, this one text here.
0.5%.
0.5%, yeah.
Right? 0.5%, that means I am paying the highest amount of tax. And who has the lowest income? Obviously, I do, right?
0.08%.
No. Who has the lowest income? This is the income.
Okay, lowest income.
It's me, right? Because it's got the lowest income. The green guy has got the lowest income and is paying the highest percentage of tax. Don't you think this is really bad? Don't you think this is unjust? The one who is earning the least is paying the highest percentage of tax. This kind of tax, there are three categories of, usually there are three categories, right? Progressive, regressive, and stationary, basically standard tax, right? Even though the percentage of tax for everyone is the same, even though the cost of the lunch is for everyone is the same, but this acts as a regressive tax point where the poor pays the highest amount of tax. See, when you're consuming something, let's forget about a lunch. Let's take a water bottle. Let's take a bottled water, right? When we talk about a water bottle, do I not have the right, if I'm thirsty, regardless of my income, do I not have the right to go into the store and ask for a bottled water? Does Kusai doesn't have that right? Everyone has that right. If I'm thirsty, I'm outside, I don't have access to water without buying a bottled water, right? A bottle of water. Do you not think don't you think I should go inside and ask for a water bottle? I should, right? The point is, just because I am a low income earner, I have to pay the highest percentage of tax. Do you think that's fair? That's unfair. All right. So indirect taxation is usually unfair. That's what I claim. Okay. Direct taxation, on the other hand, you guys saw that Kosai is paying £2,000. I am paying £1,600. Nasser is paying £10,000. So that's dependent on how much you earn. The percentage stays the same over indirect taxation and indirect taxation. The percentage stays the same. But direct tax is coming out of your income directly. Whereas indirect tax, regardless of your income, you have to pay it. You have to pay it, and you have to pay on your consumption. So if by chance, even though I am a low income earner, if by chance I was just in a very good mood and I wanted to have some good lunch, I'll end up paying the same amount of tax that this 50,000 guy is paying. How is that fair? It's not fair, right? Makes sense. So there's a very big debate on, in the world about this as well. Okay. Please note this down, and then I'm going to move on. I'm going to give you 15 minutes. Note everything down. Okay. And then we'll move on. Number one, what is tax evasion versus tax avoidance? Right? That is what we have to discuss: tax evasion versus tax avoidance. Now, tax evasion, let me just tell you first, this is illegal and this is unethical but legal. Now I'll explain this through an example. Tax evasion is very easy. Two main examples that I'm going to give you for tax evasion. Okay. Number one, non-disclosure of income. That is tax evasion. That means, let's say you earned £1,000, but you didn't disclose it. So that's tax evasion. That means you are not disclosing the source so that you can evade. That means you cannot in any situation pay tax. Okay. Number two, for example, in businesses, under invoicing. Under invoicing would mean, for example, let's say I have earned, let's say I bought something at 200 and I sold it for 800. Okay. So that means I earned a profit of how much? £600. But you know what I did? Out of this 800, I just took 400 in my bank account through card and the remaining 400 in cash. And for this amount that I took in the bank account, I made an invoice and I filed it. So when I made an invoice of 400, that essentially means that I am doing what? I'm recording it in my books, and therefore that is the record which the HMRC can check, because cash is non-traceable. So when the HMRC traces it, essentially according to HMRC's record, 400 revenue, 200 cost, means that I've only earned a 200 profit. So they will tax 200 profit and leave the 400. Make sense? That's one way of under invoicing. The other way is to increase your cost, show a higher amount, or if it's import, show a lesser amount. So that, for example, this usually happens at the time of import. Okay. Let's say I ordered goods worth £1,000. Now, let's say the law says when you order goods, anything at 1,000 or more, at 1,000 or more, you have to pay a 20% regulatory duty. That's a kind of tax, regulatory duty. It's kind of tax. So that means I'll have to pay £200 tax. And the total payment I'll have to make just because I ordered a product of £1,000 will be £1,200 for the product itself. plus for the regulatory duty. Okay. What I'm going to do is I'm going to order the same product, but I'm going to call the supplier. I'm going to ask him if he can please make an invoice of 999. Because what does the law say? The law says 1,000 pounds. Okay. I'm going to ask him to make, let's say this will put a lot of doubt on me. So I'm going to ask him to make an invoice of 995 pounds. And therefore, I won't have to pay this tax. Because as per the law, if I import something at 1,000 or more, I have to pay regulatory duty. It's 995 documented, even though it's worth 1,000 pounds. But the documentation says that it's at 995. The buying price is 995. That's under invoicing, and this also is tax evasion. All right. Now, okay, copy this example down first, and then I'm going to talk about the tax avoidance. There's another example, very good example in tax avoidance. Another example over here could be smuggling as well, by the way. Okay. I'm
Okay.
pretty sure you've heard of this term called smuggling. Okay. Where you
Smuggling. Oh,
okay. Now,
okay.
tax avoidance. Very important thing to understand. Let's take an example on this. In most of the legal systems, that means UK and other countries as well, husband and wife have a lot of benefits. Okay. Like if you're married, you're going to have a lot of tax benefits available to you. Okay. So what happens is, for example, now let's take an example over here. Kusai, you have to ask something. Do you want to ask something? I see your hands raised.
No.
Okay. So in a usual circumstance, let's say the husband earns, let's say 50,000. And let's say the wife has an income of 10,000, for example. Okay, let's say this husband earns 500,000 and wife just, is earning a minimal amount. Okay. And this guy is a full-time employed, a full-time businessman. Okay. Let's say that the husband goes out, buys a property, and puts it on rent. So obviously the husband has bought the property, therefore the rental income will come over here. Now, whatever rental income comes over here, obviously let's assume, and this is one of the points of the UK tax as well. If you earn anything above 37,700 pounds, you have to pay a tax of 40%. And if you earn anything above 150,000 pounds, you have to pay a tax of 45%. So I'll just assume for simplicity purposes, because this guy's income is more than 150,000 pounds, he's going to pay a tax at 45%. And since the wife has got an income of 10,000 pounds, anything less than 37,700 is taxed at 20% in the UK. So that means she's going to pay a tax at 20% only. Okay. Husband is paying a tax at 45%. Wife is paying a tax at 20%. These figures that you see these are according to the law, by the way. Okay. These are according to the law. Okay. So remember this. But I'm going to, obviously, this is just a basic explanation. I'm going to explain this in further detail in tomorrow's class. Now, whatever rent the husband earns, let's say the rent is 20,000 pounds. So husband's going to pay a tax of 45% on 20,000 pounds. Yes. So that's 9,000. So husband's going to, because husband is already earning such a high amount, husband is paying a tax of 45% as per the law. Now, any more income he's going to earn will be taxed at 45%. Therefore, £9,000, assuming that the rental income is 20,000. Done. So far, so good, guys. Do you understand this? You stay quiet. That means you've understood it. Okay. So I'm going to move on because, silence is assumed as you've understood basically. Case number 2. Now, this is where the tax avoidance starts. Listen to me very carefully. Because the wife is paying a lesser amount of tax, that means that at a lower percentage, not a lesser amount in absolute terms, but a lower percentage of tax, right? So what this husband will do is the husband will gift the money to the wife. Gift the money to the wife. Okay. Now, with this money, the wife will buy the property and the wife will earn the rent. The husband gifts money to the wife. There is no tax on that, by the way. In UK, there is no tax on it. Wife buys the property and wife earns the rent. Therefore, again, the rental income is the same, £20,000. But this time the tax will only be 20%. So imagine how much tax you've saved. Is this legal? Yes, it is. It is legal. Is it ethical? There's a debate on it. I personally think it's ethical, but some people argue against it. Okay. So this is something which is very important. So note this down. Case number 1 was where husband bought the property himself, but was paying tax at a very high rate, 45%. So the calculation is over here. This is for husband. Okay, the one in yellow is husband, where the husband owns the property. And the one in white is for the wife, where the wife owns the property from the money gifted by her husband. Make sense? These days, obviously, the women are independent. They don't need any money from the husband, but just for the sake of understanding, we're talking about it. Note this example down, guys, please. This is the last thing of the day, by the way, because, honestly speaking, no response means I'm getting bored teaching. Okay. The UK tax, everything about UK tax, the UK legal system, basic legal system with regards to tax, the UK taxation system, I would call it. We'll be discussing it in tomorrow's class. So for today, just copy this down.